What is happening, you guys? Michael here. Today, I'm going to walk through the exact investment details, the final numbers on the most recent investment property that we invested in, which is a short-term vacation rental that we list on channels like Airbnb and VRBO. If you guys have not seen the video of the transformation, the before and after walkthrough and photos, I highly recommend going to check that out. It was our most involved project yet. I'll drop a link to that video in the description. So after you get through this one, go check that out and you can see why these numbers are going to seem crazy high levels of return, both from a cash perspective and a total return on investment. So today what I wanted to do is do a full breakdown and walkthrough of the cash it took to invest in the property, but down payment, closing costs, all of the rehab costs, what we spent money on furniture-wise, and then what the forecasted occupancy rate and average daily rate that we're charging on those sites like Airbnb and VRBO. We're going to go over all the estimated operational expenses and our debt service on the loan, so the mortgage costs, and that will spit out our cash flow. And this one property is going to conservatively average around $10,000 a month in cash flow. That's profit after all expenses are paid. Some months are going to be as high as maybe even $22,000 to $23,000 during the very busy season. But it's just crazy to see these bookings roll in. In the first 10 days of publishing this property on Airbnb and VRBO, we have, I think, 57 nights booked and over $47,000 booked in revenue in the first 10 days. And we still have around over 300 nights available in the next 12 months to book. So these estimations are very accurate in my opinion. We have several other rentals, so let's go ahead and dive into the investment spreadsheet that I have built. And if you guys want access to this spreadsheet, I'll drop a link down below. It'll say something like, here's all the resources that I provide. Click on that link. That'll bring you to multiple different investment templates, but this is how we accurately predict how much money it's going to cost us out of pocket, and then what our estimated revenue is going to be, our expenses, and what our estimated cash flow and ROI is. So it is crucial to understand these numbers before making the actual investment, to understand how hard your money is going to be working for you within that asset. So let's go ahead and dive right in. All right, so on the left portion of this sheet, I have the investment details. So the purchase price was $499,000. We did an investment loan where we only had to put 15% down. So our total down payment was $74,850. The estimated closing costs, actually these are the actual closing costs, but usually I have an estimated around 3%. We actually got the seller to agree to pay for a large portion of our closing costs, which was great. So the total out of pocket in closing was $4,534.99. And then the actual rehab costs, we were about $30,000 over our rehab budget, but I'll get into why we were okay with that later on when you see what the after repair value of the house is. The total cost we spent on rehabbing the house, this whole project, was $101,397. Now all of these costs were split between myself, my wife, and then the other couple that we went in on this investment with. He is a home builder. He's been building homes for over 10 years, whether it's flips or new builds here in Nashville. We met when he built the houses across the street from us, and we said, hey, let's find a project where it needs some work so you can bring your skills and expertise on the rehab portion, and we'll bring our skills and expertise around the short-term rental setup, furnishing, and how to manage it. So we're splitting everything 50-50 from an out-of-pocket investment perspective and from a cash flow perspective. So the actual other costs associated with the rehab, so we included here like fuel it took and other holding costs associated with holding the property during this time, was $7,581.54. Now the actual furnishing costs came in, we were almost right at our furnishing budget, which was $65,000. My wife and I have fine-tuned that process and figuring out how much it will cost to actually furnish a place. So that was $67,758. So the total money invested out of pocket was $248,540. So I know that sounds like a crazy amount of money, and just a year and a half ago, if you asked me if we were going to be able to invest this sum of money, even though we are splitting that 50-50, so only half of that is from out of our pocket, I would have told you were crazy, but investments seem to compound really quickly, a lot faster than you guys may think. So let's take a look at the forecasted revenue. So we have to look at the average daily rate that we're able to charge. I initially predicted this to be around 500 to 550 a night, and that was extremely conservative. But when I'm looking at investments, I want to be extremely conservative on the forecasted revenue because I'd rather be surprised by a little more cash flow and a higher rate of return than be surprised by less. So the actual average daily rate that we're seeing right now is around $750 a night from what we're getting booked at. And it honestly may be higher than that going forward. But the estimated occupancy rate is going to be right around 65%. It may be closer to 70 to 75%. We're going to just have to wait and see. But again, I want to be conservative here. So the annual revenue is looking at it's going to be right around $177,000 or $178,000, which would bring in around just shy of $15,000 per month. Now, honestly, when I do a video maybe a year from now, these numbers are probably going to be higher. I think this place is going to do over 200 grand in revenue, but we'll just wait and see. So next we need to factor in our monthly operating expenses. All right, so this is going to include taxes, insurance, HOA, water, gas, electric bill, Wi-Fi and the TV service that we provide, future repairs, we want to budget for that as well. And then incidentals like soap, coffee, toilet paper, etc. Actually, our cleaners provide most of that built into our cleaning costs, which also, you don't see the cleaning costs here, but I also don't factor in the money that we're going to collect from guests because we charge them a cleaning fee. So I just consider that a wash because what we collect from them is basically what we pay our cleaners. So I do not account that for the investment details. Now I do account it for in like when we're revenue tracking and things like that, we actually count the cleaning as an expense. But for here, we leave that out. We also have a pest service, landscaping, and our Your Porter or Smart B&B tool. We use Your Porter, and then Price Labs just to help automate pricing and guest messaging and things like that. And then the city permit, annual permit divided by 12. And then Airbnb takes a 3% fee from hosts, and that is just, all this is automated once you punch in. For those that do have interest in this sheet, everything that's yellow would be a manual input. So that spits out our total monthly operating expenses, which is $1,794.18. Annual operating expenses, you can see there, $21,530. So next we're going to look at net operating income. So this is going to take our forecasted revenue minus the forecasted monthly operating expenses. So in this case, we're looking at it on a month-to-month basis and on an annual basis, but most importantly, I look at the monthly. So that's going to be $14,828 minus that $1,794.18, and that spits out $13,034. I don't really pay attention to cap rate too much, but just to give you an idea of how strong short-term rental performance can be, if you're looking at cap rates compared to like a multifamily, I just have that for comparison. And then we're going to subtract principal and interest on the loan. So for this, the loan we have, principal, interest, and PMI, that's private mortgage insurance, totaled $2,289 per month. So how to get our cash flow? We're going to subtract our principal, interest, and PMI from our net operating income, which gets us a estimated monthly cash flow of $10,745. So if you multiply that by 12, the annual cash flow after all expenses are accounted for, $128,939 split between us and our investment partners. Now, is that good? So honestly, you don't really know until you calculate the cash on cash return. Cash on cash return is a good metric to compare to investing in the stock market or to something else. It's a purely on a cash basis. So you're going to look at the annual cash flow divided by the total amount of dollars you invested out of pocket. So typically you're looking for 7 to 10% if you're investing in the S&P 500. Most long-term rental investors look for 8 to 12%. In short-term rental world, I'm looking for a minimum of 25%. And honestly, much higher than that in our investments if we're really seeking a good property. So this sheet is automated here. So the rest of the sheet is pretty much going to be auto-calculated. So cash on cash return in this scenario is $128,939 of cash flow for the year divided by $248,540 of invested out of pocket. That gives us a 51.88% cash on cash return. That is insane. I'm just still blown away at how more people are not doing short-term vacation rentals. And I think the biggest thing, if you guys have follow me and subscribe here on YouTube or TikTok or Instagram, the biggest thing for us is to pick 1 to 3 ways to become Instagrammable or stand out with your property. It's very competitive in a lot of these larger markets. If you can stand out, it's about click rate. So on Airbnb, you need to earn somebody's click to look at the first photo, gets you to the splash page, which has 5 photos, the description, and all that stuff. Once you're there, you have those first couple key moments, right? The Instagrammable moments that in someone's mind, you want them to be staying at your place before they ever click book. So by creating unique experiences and spending a little extra money at the forefront, you're going to reap massive benefits and it'll pay massive dividends in perpetuity moving forward. So let's take this one step further and talk about why this is an amazing investment, because we did do the big rehab we did a ton of different stuff. Again, if you look at the video in the description below, you'll see everything that we did, but we added additional square footage by changing a 2-car garage, turning it into an amazing home theater room. We did a ton of other work, most of it cosmetic, changing up the floors, new paint, and then a bunch of new furniture. So we really took this to the next level. And based on the projected rental income and the added square footage, when I look at similar comps in the area that recently sold in this market, this house would probably sell for $1 to $1.3 million. And I've spoken with the realtors I worked with, and they agree that based on what they're seeing, it would probably sell for something crazy. So if you think about, we got it at $499 and the amount of money we put in to have that much of a margin if we were to sell, but that's just equity we're going to hold on to. So let's review the total return on investment, which is going to account for not just cash flow, but it'll account for any forced appreciation through the rehab. It will account for principal being paid down on the loan during the first 12 months, and it will account for any natural appreciation we're expecting over the next 12 months, which I usually just do a ballpark 3%, even though it's been way higher than that the past 12 months. So let's go take a look at the total return on investment. So we're going to add the estimated appreciation from year 1, basing this on a $1 million valuation on this property. I think it could be higher than that, but let's just say $1 million to be conservative here. That would be around $30,000 in the first year. Now we have principal being paid down on the loan. If you guys go to a loan calculator and look at the amortization schedule, look at the principal being paid down in the first 12 months. In our case, it's going to add up to $7,692. And then we look at the total amount of equity gained through forced appreciation, that's through rehab on the property, totaled $501,000. And I know that's crazy, but based on what we could sell the property for, if you just simple math, you just take the 1 million minus the 499 out of pocket to acquire the property, and we just get that insane number. So if you add all those up, if you add the cash flow for the year, the forced appreciation, natural appreciation, and the principal being paid down on the loan, add all that up and then divide that number by the initial money invested out of pocket, and that gets us a 268.62% return. So that's why investing in real estate is honestly so powerful, is you can get really creative and leverage the bank's money to acquire a really, really strong asset that not only produces insane amount of cash flow, but you can grab so much equity in the deal by doing some sort of rehab and taking it from a mediocre property to one that's going to perform really well. So if you ever did want to sell or tap into that equity by doing a cash out refinance or something similar, then you can and use that money to go acquire more real estate. So investing in real estate can be extremely powerful, can set you financially free, and can build long-term generational wealth. So I know it's crazy. I mentioned how much we've had in bookings in the first 10 days of being online. At the time of recording this, it's April 2021. We already have over $25,000 booked in July, with still, I think, 10 days available left to book, which is insane. If we get some of those other days, which I think we will, we're going to be approaching $30,000 of revenue in 1 month. Now, if you look back at that template and see what we were predicting, which was like I think around $14,000 or $15,000 on average per month, some of these months we're going to blow that out of the water, and the cash flow on that's going to be somewhere between $20,000 and $25,000. So divided by 2 between us and our investing partners, that's 10 to 12.5 grand per side of the investment, which is crazy. So This is not our first ever investment, so we have some experience. But for those that are new to investing in real estate or are considering investing in real estate, I highly recommend investing in short-term vacation rentals. It has changed our lives. It set my wife and I financially free, allowed us to quit our jobs and pursue other things we're truly passionate about. So I can't wait to share the numbers. Each month I do a cash flow report from all of our rentals. I can't wait to share this with you guys, especially moving into the summer months once the rental program's fully established and we have normal bookings. It's going to be really fun to see the growth in some of these markets that we are invested in. But thank you guys so much for taking the time to watch, and hopefully you found some value in this video of me breaking down the numbers. Again, if you have interest in this investment template, it is in a link in the description below. And then also, if you have interest in learning like a full guide, step-by-step from beginner, novice to expert short-term rental investor, check out my Airbnb Investor Academy. I'll drop a link to that below. I have student number 1 and student number 2 just finished standing up their first short-term rental properties, and I couldn't be more excited. One of them already gave me a testimonial video, and I posted that, but he texted me last night and said, hey, I have an update to the testimonial video. We're going to cash flow over $4,000 in our first ever month on Airbnb. So just like saying that out loud gives me butterflies. Seeing other people succeed is like super satisfying, and I manifest in success from other people who are also interested in becoming financially free through short-term rentals. So thank you guys so much for watching, and if you aren't subscribed, subscribe, follow along for more. I provide a ton of content here and on Patreon and other social platforms. Would love to have you guys back in the future. If you have questions, drop in the comment section below. I'll do my best to answer all of those, but we'll catch you guys next time. See ya.